Hello everyone and welcome. If you've been glancing at the news at all lately, you'll know that the world of finance is absolutely buzzing about one thing: gold. Prices aren't just high, they are smashing records left, right, and center. And it feels like everyone in India is talking about it. So let's get right into it and figure out what on earth is going on with the yellow metal.
And this whole conversation just got a massive boost from, well, the master blaster himself, SachinTendulkar. In a recent ad for Tanishq, he wasn't just selling jewelry, he was actually sending a really powerful economic message to the entire country. But what does a cricket legend have to do with our nation's economy? Well, it turns out a whole lot, and we're going to unpack exactly what he meant and why it's so important, especially right now.
But first, just look at this number. Let it sink in for a second. As of 2025, the price for 24-karat gold has rocketed past a staggering 1,10,000 rupees for just 10 grams. Now, to put that into perspective, this is a price point the financial experts thought was maybe years, if not decades away. This isn't just a price increase, people. This is a full-blown gold rush.
So, to make sense of this whole madness, here's how we're going to break it down. We'll start with Sachin's message, then dig into why prices are shooting for the moon. After that, we'll explore India's very unique love affair with gold, understand how the market actually works, and finally, take a look at the challenges and the future of gold.
Okay, so let's start with that message from Sachin. When he talks about exchanging old gold to strengthen the economy, that's not just some clever ad campaign tagline. No, it's a genuine call to action, and it's deeply rooted in India's macroeconomic reality. He's really pointing to a fundamental problem our country grapples with year after year.
And this slide here nails the issue perfectly. We're spending billions and billions in foreign currency to buy gold from other countries. But Sachin is pointing to the solution: creating a circular economy for gold. By simply recycling the gold that we already have in our homes, we can keep that immense wealth right here, within the country. This reduces our import bill and ultimately makes our economy so much stronger and more self-sufficient. It's a simple idea, but man, is it powerful.
Sachin's message is so timely, of course, because of this insane price surge. So that brings us to the billion-dollar question, or I guess the 1 lakh rupee question. Why is this happening? What are the massive global and local forces that are pushing gold prices into totally uncharted territory?
So, here are the 6 heavy hitters driving this rally. First, you've got global economic worries making investors super nervous. Then there are geopolitical tensions adding to the fire. Gold is also seen as the ultimate shield against inflation, which has been a huge problem lately. And get this, central banks around the world are buying it up by the truckload. On top of all that, you have currency swings, and of course the good old classic, supply and demand. Let's break each of these down.
Right, so you have to understand this concept of a safe haven asset. Think of the global economy as a big, stormy ocean. When things get choppy, with talk of recessions, wars, or that nasty thing called stagflation, investors don't want their money in risky boats like the stock market. They want to move their wealth to a safe harbor, an asset that has proven its worth for literally thousands of years. And that safe harbor, my friends, is gold. It's seen as this incredibly reliable store of value that protects you when everything else is sinking.
And it's not just individual investors running for safety. Look at this number: 102 tons. That's how much gold our very own Reserve Bank of India added to its domestic reserves in just 6 months, between March and September 2024. Why would they do that? Well, they're trying to move away from relying too much on the US dollar and find some stability. And when the RBI and other big central banks start buying gold on this massive scale, it sends a huge signal of confidence to the market and, of course, drives up the global demand and the price for everyone else.
Okay, so demand is clearly through the roof, but what's happening on the supply side? Well, that's the other half of the puzzle. This comparison really shows the problem. You see, gold is getting harder and harder to find. Back in the year 2000, for every ton of rock that miners dug up, they could get about 2 grams of gold. Today, that has dropped to less than 1 gram per ton. This basically means mining is getting way more expensive and difficult, and big new gold discoveries are becoming super rare. So you have soaring demand on one side and a tightening supply on the other. It's the perfect storm for higher prices. Now that we've got the global picture, let's bring the conversation back home. Because here in India, gold is just so much more than an investment. It is literally woven into the fabric of our culture, our families, our traditions. It's an obsession that spans generations. And this unique relationship has some absolutely massive consequences for our national economy.
This chart right here tells the whole story. A full 50%, half of all the gold consumed in India every single year, is for weddings and festivals. It's not just a financial choice for us, it's a cultural necessity. Another 35% goes into investment and retail purchases. This just shows that our demand for gold isn't just driven by market trends, it's driven by our deepest traditions, which means it stays consistently incredibly high year after year after year.
And this is where our cultural love for gold smacks right into a very harsh economic reality. This bar chart is just wow. In 2024, India consumed about 785 tons of gold. But guess how much we produced ourselves? Less than 15 tons. This means we are forced to import over 98% of all the gold we need. This huge import bill puts a massive strain on what's called our current account deficit, or CAD. Basically, the CAD is like our country's bank statement. A big gold import bill means way more money is flowing out of India than is coming in, which is obviously not great for our economic health.
Now, I want you to really let this number sink in. 3.8 trillion US dollars. That is the estimated value of all the gold that's just sitting in Indian households. To give you some context, that's nearly 89% of our entire nation's GDP. We are, quite literally, a country sitting on a mountain of gold. And this is exactly why SachinTendulkar's message about recycling is so critical. If we could unlock even a tiny fraction of this household gold, it could completely transform our economy.
So we've talked a lot about the why, but what about the how? I mean, how does this giant global market even work? How are the prices set every day, and what are the different ways you can actually own a piece of this precious metal? Let's pull back the curtain and demystify the entire journey of gold, from deep inside a mine all the way to your bank locker or your investment portfolio.
Okay, so broadly speaking, you've got two main ways to own gold. First, there's the old-school physical gold, the bars, the coins, the jewelry that you can actually touch and feel. The big pro here is that it's a tangible asset that's in your possession, but maybe you want the benefits of gold without the headache of guarding it. That's where paper gold comes in. This includes things like gold ETFs or sovereign gold bonds. The advantages here are huge. They're super easy to buy and sell on the stock market, you have zero storage hassles, and they're very liquid. The only real con is, well, you can't actually hold it in your hand.
You know, today's crazy prices didn't just happen overnight. This timeline gives us some really good context. For a long time, the world's currencies were pegged to gold. When that system ended back in the 70s, gold's price was free to float on the open market. The real surge, though, began in the early 2000s when China's economic boom created this huge new demand. Then, the 2008 financial crisis really cemented gold's reputation as the safe haven when everything else is collapsing. And most recently, of course, the chaos from the pandemic and global conflicts has pushed prices into a whole new orbit.
So the big question, how does gold actually stack up against other investments? This is really interesting. If you look at the last 20 years, the average annual return on gold has been 11%, which is almost identical to the S&P 500 stock index. But now look at that last column, diversification benefit. Gold has what's called a low correlation with stocks. What does that mean in simple terms? Think of it like a seesaw. When the stock market goes down, gold prices often go up. Or at the very least, they stay stable. They don't move in lockstep. And this is why it's such a powerful tool for balancing your investment portfolio. It gives you that stability when other assets are going haywire.
All right, we have covered a lot of ground, but what does the future hold? It's not all smooth sailing and record highs from here on out. There are some very real challenges and headwinds that gold investors need to think about. So let's look ahead and talk about what's next for the yellow metal, both in our economy and in our personal investment plans.
So, what are the downsides? First, unlike stocks that can pay you dividends or bonds that give you interest, gold just sits there. Your only profit comes when you sell it at a higher price. We've also talked about how physical gold comes with real costs for storage and insurance. And while it's a great long-term safe haven, prices can be pretty volatile in the short term. Here in India specifically, high import duties add to the cost. And of course, if our rupee weakens against the dollar, our gold imports instantly become more expensive for us.
So, what is the way forward for India? Well, this slide sums it up beautifully. Step 1 is exactly what Sachin was talking about, encouraging the recycling of the gold we already have. Step 2 is to formalize the market to make it more transparent and crack down on smuggling. Step 3 is to build our own gold processing industry so we can be more self-reliant. And finally, step 4 is to encourage more people to invest in paper gold products. Together, these steps can create a much more sustainable and robust gold ecosystem for our country.
And that brings us to our final question. After looking at all the global forces, the cultural significance, the market mechanics, and the future challenges, what's the verdict? Is gold really the ultimate safe bet for your financial future? As we've seen, it offers some incredible benefits for diversification and wealth protection, but it also comes with its own unique set of risks and limitations. The answer really depends on you and your own financial goals.
Phew, we covered a huge amount of detail today, I know. To help you absorb it all and really get a grip on this topic, we've prepared some comprehensive notes and a fantastic, easy-to-use mind map over on our website. The link for that is right there in the description below. Thanks so much for joining us.